What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Ron Moore. How you doing today, Ron?
Doing great, Dan. How about yourself?
Oh, I'm fantastic today, especially because I don't know if you know this, but my very favorite audience member has joined us today. And why is my favorite audience member joined us today? Well, this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, and people like that. And you may ask, why would I do such a silly thing? Well, if you've ever heard of an off-market deal, also called a private deal or sometimes called a 506B deal, you'll know that you need documentation of your prior substantive relationship, or else the SEC will get ants in its pants. So that's what I'm up to, and the benefit to you for watching these different episodes is you get to understand how my guest fits into a commercial real estate deal and how they work as a whole and communicate more effectively on the subject. But before we get too involved into business, Ron, do you want to say a thing or two about yourself?
Great. Yeah. I'm CEO and president of a small company that runs three hotels, two in Florence, Oregon, and one in Salina, Utah. We also manage just a fourplex. So we're real small operators, nothing big. Personally, I just got started investing in real estate as an LP this year, and I have no desires at this point to be a sponsor, a GP, or anything like that. I just want to compound my money a little bit. So
I love it. I love it. You've really framed things in there, and you've also mentioned your motivations, which is the first segment in the Dan Does Deals commercial chance encounter, whatever we're doing here. But before we get
good.
too deep into that, I gotta say, but wait, check your eight. And Ron, I don't know if you can see through the camera and down at it, it's the audience is five down at the eight. There might be this hideous subscribe button, and maybe they should do something about it. Okay, it's a stupid
Yeah, sounds good. I,
joke.
I I think I'll have to watch one and do it myself. So there we go.
Good call, good call. I'm biased because I want YouTube to start paying for these videos. I'm just
Good.
biased. But that's my distinct motivation. But on this interview series and throughout my time involved in the real estate sector, I've met all sorts of different people, and I found that everybody has their own unique why. But when it comes to people who are going to make another commercial real estate acquisition, I found that the motivations fit pretty cleanly into these five different categories. So I go through them in every episode of Chance Encounter. The first one is preservation of purchasing power. What on earth is that? Well, some people don't have a job per se, and the way that they make ends meet is from the proceeds of ownership. In other words, they have a portfolio and that whatever profits there are go to them, and that's how they pay their bills. So why would somebody who's already in that situation want to make another acquisition? Well, there are a couple reasons. One is if inflation is rearing its ugly head, all right, then you're going to need to be careful of the purchasing power of your cash flow. So it might be time to make another acquisition. But the other situation is if you're buying at a steep discount, like when the property's under distress or there's an asset crash, perhaps, rates recently going up big time, something like that, sounding very familiar. That's when the preservation of purchasing power crowd are going to be most active. And I got to confess, that's not where I'm at personally, but I love helping people like that. Personally, what I'm up to is I'm trading time directly for wealth. What's that all about? My background is in technology, specifically in the CRM agency industry. And so that means mass emailing and then credit card transactions online. And because all roads lead to real estate, if you're looking for bigger and better things, in 2014, I made the switch to start helping a real estate firm that was doing 10 single family transactions per month. And I was watching how much my boss was making. And then I was watching how much I was making. And as a high salary, high wage earner, the disparity in taxes were kind of mind blowing. So it hit me is how can I pivot and use my skills to get access to more deployed capital, aka equity, and that's what I'm up to. So it's like a retirement plan, but that's too subtle for some people, especially youngsters. Some people, they're more concerned about taking control of their schedule. Maybe that means they want to hustle hard now so that they can fast track their retirement, but maybe it means they'd rather live a lifestyle where they only work 11 months per year or only 3 weeks per month or something like that. And that is why they're making their acquisitions. It's a form of basically dialing it back long term. And that is not the case with the next group. They're just plain ambitious. They're motivated by that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that is the reason why they're going to hustle into their 90s and be such vital parts to their GP teams. But that's not everybody. Some people, it's not so much for their own name or generations to come. They've picked a sector of society, or maybe it's animals, maybe it's the environment, maybe they want to send people to space. But regardless, they figured out that there's a financial component that's quite substantial if you're going to be making a big impact. And that's the reason they're creating a portfolio of commercial real estate. Now, Ron, of those 5 different motivations, what combination of those would you say describes you best?
Uh, Probably a little bit of all of the above.
Mm-hmm.
Probably the one that is least important to me is own your hometown. I
Mm-hmm.
mean, but I am certainly doing this so that my wife and I can. I mean, I'm 64. I retired 4 years ago. My father-in-law passed away, and I got another W-2, and it's a great W-2 because I can work from wherever I want to and stuff like that. So I've kind of got that going on right now. But you know, we want to build more wealth for the family. We want to have enough to live like we've never lived before. Okay.
Mm-hmm.
And so, you know, buying some cash flow is good right now. That
Mm-hmm.
gives us a little bit more money coming in. You know, and, you know, I donate to charities and, you know, that helping other people makes me feel good. So, you
Mm-hmm.
know,
Mm-hmm.
so yeah, I'd say it's a little bit of all of the above, but money's not a huge motivator. Just acquiring baubles and bling is not where I'm at.
Right, right. We had no need for the doodads. But
Right.
the next question I have for you, Ron, it has to do with tolerance for risk assessment. And the reason why I include this in the show is because if you've ever been involved in a 506B deal, the securities attorney in the mix tells the issuers, they really insist on it, that they give every investor this really invasive questionnaire about your finances. And there was one question that jumped out to me as a person who's been building tests and online wizards. You know, I've been using questions for a long time to get specific data, especially through CRMs. And the one question I thought it really didn't do what I felt it ought to, you know, give real usable information. It was the tolerance for risk assessment question. So I've made my own, and it's a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. Ron, that can be inside real estate, it can be outside real estate. What's too risky for you?
Oh, wow. That's a good question. People brings a lot of risk to me. As a matter of fact, you know, I used to hedge portfolios and stuff like that. People say, "Hey, look, futures market's too risky." I go, "It depends on how you invest in them, right? How much, whether you're going to leverage it to the hilt or whether you're going to be pretty cautious with it." I don't know that there's any investment that's too risky if you're managing the position size correctly. All
Mm-hmm.
right. And but yeah, if you go to the casino and put everything on, you know, 00 green, you know, that's win big, lose more often, and come out typically a loser. So
Mm-hmm.
so for me, um, what I really try and do is make sure that that I have the best chance possible to make money while preserving capital. And I can do that almost with any investment. But in real estate, especially syndicated real estate, you're basically risking it on your money on people, not necessarily on a piece of real estate.
I completely agree. I completely agree. And it's funny, a lot of people they like to use the punching bag at crypto, and then they end up saying, "Oh, I don't like crypto because you can't eat it like a great big subscribed sandwich." Right
Yeah,
there. Is that intense or what?
that's
So,
awesome.
yeah, it's my very subtle reminder, and not only that, I use it as a reminder that it's time to pull out the Dan Does Deals Commercial Core Competency Cube. It's got the 6 different roles in a commercial real estate deal in it, and the reason why I pull it out, I go through all 6 sides in every single episode of Chance Encounters. I go through every episode because it'll help you understand how my guest fits into every deal. But the main thing is I want to make sure that you can effectively communicate on the subject of how a commercial real estate deal works. So if you go to dandoesdeals.com right now, it's free to download and print out your own copy of the cube. And like a complete dummy, I committed the cardinal sin, which is you never give away your freebie without asking for some sort of contact information. I didn't ask for that because I didn't want anything in your way to printing this out and practicing it with your friends and family, because if you can't express this well, then it's not going to be a career for you, quite frankly. So let's get started and find out how it goes. We'll start off by talking about what a repositioner is. A repositioner is an acquisitions person. So they are underwriting the deal. That means they're doing the math, they're making the projections, they're figuring out, they're called repositioners because they're figuring out how can they change how the property is run to find more upside. So they're actively involved. They're figuring out all the tricks, and they're figuring out, they have to do the math first of all as part of underwriting to go, is this property even making the amount of money that the broker or seller claims it is? But one thing that's a little bit counterintuitive about every repositioner's job, one way that they can find the upside is by having a vast network of financiers. It sounds like Ron is a financier, and what it means to be a financier is it's somebody who works with paper and money. They are not on the GP team. They're just involved in lending, that sort of thing. And the reason why repositioners have to have a vast network of financiers is because if the repositioner can secure a more advantageous loan, that automatically goes to the profitability of the building, so it's automatically a better thing. So that's a role, but it's distinct from the GP team. But the repositioner's more traditional way of finding upside is looking into the operations and stopping those Benjamins from going down the toilet. But of course, there's a lot more to operations than just unclogging toilets and collecting rent and mowing lawns. The things that I contribute to the GP team that I was on in the past, and I look to do this again in the future, it's one is if you understand that vacancy is the enemy in a commercial real estate deal, it means that even if you are dealing with the bigger properties and you're ultimately outsourcing, somebody on your GP team really should have really good marketing chops, because that means they can step in and get those units filled, even if the third party property management aren't coming to bat. On top of that, I also bring my web-based properties, the web funnels and CRM and automations to the team. But of course, you can try to make a profitable commercial real estate business just by making more efficient operations, but it's probably not going to be enough. So fairly frequently, the repositioner will get a contractor team involved to upgrade the units, to do a value add, to do renovations. The idea being that if you have nicer apartment units, then the next resident would be more than happy to pay more in rent than the previous one. So you've got baked in upside. But of course, you can totally go broke with contractor work. You need to keep track of that they're not using subgrade parts, make sure they're keeping the schedule, they're not dragging their heels, making sure they're actually showing up on the work site, because otherwise that translates into vacancy. And if you're like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground. I need somebody who can be there in an hour or so, because that won't be me. I'd still be stuck at an airport in an hour or two. But When the repositioner has an ideal property in mind, they've assembled this team. Let's say it's a 350 unit apartment complex worth tens of millions of dollars. They'll turn around to the financiers and say, "Hey, I got this great property. It's 350 units. It's tens of millions of dollars. You don't happen to have, I don't know, tens of millions of dollars you want to lend us?" Well, the financier is going to have one burning question that I haven't mentioned yet. And there are many coaching programs, guru programs, mentorship programs that really gloss over this next one. So I encourage you to listen carefully. They're going to ask, who is the KP? Who's the sponsor? What's that all about? It's best explained with a hypothetical. So let's say you're an engineer or a physician or an attorney or something like that, and you decide that you and your circle of friends will pool a deposit in, maybe you put in like 100K each or something like that, take over the local commercial real estate building. Sounds like a good idea, right? Well, when you get to the bank, you're going to find out that you're not going to be eligible for a loan on a 350 unit apartment complex unless somebody in the fold already owns a 350 unit apartment complex. So that's going to be very key, and they're not going to tell you about that in a lot of guru programs. On top of that, you need a certain amount of liquidity, and then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you got yourself a commercial real estate deal. So, Ron, have I got you right that you, when it comes to the commercial real estate deals, that you're gonna keep your hospitality, but as far as like multifamily and other forms of commercial real estate, you're more looking for the LP side, the
Yeah.
financier side. Is that
So,
correct?
so on my personal side, I'd definitely put myself in the financier. On the hospitality side, I'm buying and acquiring properties all the times, and we typically do that out of our own funds, and maybe a little bit of bank borrowing. So,
Mm-hmm.
but I mean, right? I understand all of that, right? Contractors, terrible, and and trying to find somebody to come out. So, I hired a really good guy that had a lot of good experience, and then I just put a contractor on retainer,
Mm-hmm.
and he works for me solely starting in 2024, and so I won't have to worry about that. So I've got a little bit of experience on all of it, except for maybe raising funds, and typically that's through bank deals. My ability to go out and ask people for money that I don't know very well is not. Sales was never my strong suit, so
Mm-hmm.
I prefer to put together the numbers. But when you're doing that, you got to do some underwriting. You got to see what the metrics are going to look like and stuff like that. So
Mm-hmm. Mm-hmm. I love it. I love it. So that brings me to the next question, which is the buy box. And when syndicators, investors, real estate players in general are saying, "Hey, what's your buy box? What's your ideal property?" We're really asking about three things. The first one's geography. Where is it? Which state? Which county? Possibly even which neighborhood. Okay. If you're going to call it ideal, it's location, right? The second one is going to be size. And most of my guests here on Chance Encounter are in multifamily, which is apartment complex commercial real estate. And the way that you define size in apartment complexes is by unit count. And the reason why it's important is because you've got a completely different kind of crew that'll be taking over 10 unit deals compared to 150 unit deals. So you need to know what that buy box is. But the third one, I'm actually going to start calling it desirability. A lot of people call it class, but the reason why I don't like it is because it splits into two different, like completely different things. And those two things, one is condition, and then the other one's area. So if you're talking about condition, that talks about, how old is it? How beat up is it? Is it in reasonably good shape? Is it really fancy looking? And what about amenities? Does it have all sorts of things included for the residents in that location? Or is it really no frills, bare bones sort of thing? So that's the condition. But when you're talking about the area, you're talking about what's the crime rate like where this property is located? What are the school districts like where the property is located? And when they say location, 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 that old trope of real estate, what they're really talking about though is traffic, traffic, traffic. If you've got more people going past a certain location every single day, then it's going to be more desirable than the others. But both the area and the condition are both ranked the same way as in grade school. So you got A plus at the top, and then A minus, and then B plus, and so on. So Ron, I get that you're not generally in multifamily. You're not going to want to be in the driver's seat, but you're still going to have a buy box of some sort. So what's easier to say yes to?
I am probably, with what I want out of a property and stuff like that, I'm probably a solid B class type investor, in a location where growth is happening. Ideally, it's happening above averages, in the local area and above averages nationwide. One of the nice things about, being a, commercial real estate investor is you can invest anywhere in the country. Well, actually anywhere in the world if you want to, depending on how well your knowledge is, right? So I want a little bit of safety net, so I buy in a location that's expanding rather than contracting. Sometimes I don't mind buying in an area that I know really, really well too.
Hmm.
Okay, and it doesn't necessarily have to be growing, but then that probably comes into more of the neighborhood than anything else.
Hmm.
And so that's my typical buy box is that, you know, um, again, in that buy box though, Dan, right? Where's my team? Where's the sponsor? Where's my GPs, right? I mean, if they and I don't mesh, I don't care what the property looks like, I'm not going to do business with them. So,
Hmm. Hmm. Exactly, exactly. And you get that that's a lot of the reasons behind many of these questions, right? It's just
right,
to find out, like, are you even going to stick around on this? Because
right,
yeah,
yeah.
it's not all their money that they're playing with. So,
Yeah.
but as far as these specific states go, then like just what I'm looking for is so that anybody in the audience knows what's like low hanging fruit for you. So,
So,
that way they're not trying to offer you self storage in
so,
Alaska.
well, I typically multifamily. I will look at, storage because I think too many people keep crap and, they'll spend more money than that crap is worth to keep it in a container somewhere. Okay. And that seems to be pretty good money. Plus, I have a good friend of mine that owns, two self-storage units. So if I ever have any questions that I need to find out, I've got a good resource. One of the areas that, two of the areas that I'm really interested in taking a look at, but I have not invested yet because most of my LPs have been in multifamily. Um, well, storage certainly, but, also, senior assisted living, because the aging population, I think that a good operator there, is worth being in, and then warehousing.
Hmm.
I think there's probably some decent money to be made in warehousing. But my key right now is multifamily because I understand tenants, I understand rents. I mean, a hotel is nothing but a very short-term rental property.
Hmm.
So, I mean, that's what I understand.
Okay, so it sounds like for areas you're fairly agnostic, and it sounds like more like
Yeah,
cash on cash and equity
yeah.
multiples are more of a
Well, and to give you an example, I did 9 deals this year. All right. I mean, don't let that get to my head because they were all fairly small capital, right? I mean, just trying it out, I wanted to make sure I was conservative. I wanted some diversification. So, I think I have 6 operators, 9 deals, some of them partnered together, ranging from 25,000 to 50,000 in commitment. I wasn't willing to step up to 100. That was too much in my portfolio, but I've got deals in Arizona, deals in Texas. Probably that's where the Dallas Fort Worth location is probably my biggest concentration. A deal in South Dakota, another one in Salt Lake, and another one in, Atlanta, Georgia.
Beautiful,
So,
beautiful.
so
Okay.
that hopefully that helps you out, understand a little bit.
It definitely does, definitely does. But the next question I have, it brings me to the crux of commercial real estate for me, which is that because it's multifaceted, nobody's going to be all six sides of the die for any meaningful amount of time. And we're all going to be eager to put together, new referrals, new teams, all that sort of thing. But at the same time, we all have our own unique skill sets. So we're going to be disproportionately well suited to help some people more than others. Me personally, because I'm the guy on the internet with the marketing, content creation, and automation skills, the sponsors and KPs generally have room for somebody like me to do what I do and really make a disproportionate difference. Whereas generally repositioners, they need grunts who can put in 80-hour weeks for years and years in a row. And that's not in the cards for me personally. So I'm eager to talk to them. I'm also eager to talk to financiers and locals. But Ron, it sounds like it'd be the repositioners, the locals, and other sponsors that you'd be most eager to talk to. Have I got that right? I don't want
Yeah, I'm always interested in knowing how the deal works, and I'm a numbers guy by trade, right? I mean, I don't necessarily want to ever be one, but I need to know that somebody. I mean, for instance, somebody that shows me a cap rate that's the same at sale time as it is at purchase time,
right.
I'm going, they don't understand how the markets work, right? And
Yeah.
so I would say I would say probably I'm not raising capital. I'm not really interested in finding other people like me that, other than to build a network of friends and get access to maybe more knowledge and more deals. But when I'm connecting with people on LinkedIn or wherever, I'm looking for people that have some sponsorship, you know, capabilities and have a philosophy about money and investing that matches mine.
I love it. I love it. And then as far as getting in touch, I'm lucky because I got a super duper distinct last name right here. So it
Yeah.
makes it really easy to find me on LinkedIn. But if you use your phone to scan this QR code, that goes to the FAQs page of 506 BME, which is the platform that I offer the service of documenting your substantive relations with your investors. The idea being that when the SEC audits you based on your 506B raises in the past, the thing that they're going to look for is that documentation. How can you prove that you actually knew somebody's level of sophistication, appetite for risk, and whatnot
Well, you
before
got my
you entered?
picture and my voice. You're pretty good, Dan.
Yeah, exactly. So he's not, if he lets me know about a private deal, that is not public solicitation, and
Right.
that goes two ways. But Ron, if people want to reach out to you, is it through a social media channel, through a website, phone, email? How should people reach out?
Probably LinkedIn is probably the easiest way.
Mhm.
My inbox on my email has got 1,000 unread messages as I look at it today, so I don't need any more there unless we're trying to connect on a professional level.
Excellent. Okay, so LinkedIn it is. And that brings me to my public service announcement, which is not for you, Ron, it's for you in the audience. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, like migraine like symptoms, I'm confident it's due to the hideous subscribe button, which is just down there. You can hit it for free and then it goes away. And okay, I'm biased once again because if enough people hit it, then YouTube will actually pay for these videos instead of me. And I think that would be amazing. And it doesn't cost you anything. The only trade off, just so we're completely clear, is that my videos may show up on your list of suggestions. But you can feel free to ignore those suggestions because, quite frankly, I just appreciate the fact you spent this time with me. Just like Ron, I appreciate you taking the chance on this to join me on the podcast. This has been great getting to know you a little bit better.
Good. Well, it's been my pleasure, Dan, and tell you what, I was expecting it to be a little bit more painful, but this was a complete joy. Thank you very much.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506 BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.